Very excited to go over the latest data that just came in for Q3 in the real estate markets here in Delaware and Maryland. First, I wanted to go through a national view of what's happening in the market as the conditions are a bit unusual and the market is continuing to move. So for those of you who don't know me, I'm Dustin Oldfather. I have an amazing team that works throughout Maryland and Delaware, from the Atlantic to the Chesapeake. And always working to give people a great experience in real estate. So what is happening in the market? Well, typically most listings do wait until the spring to actively go into the marketplace, which would be December, January, February. You see a reduction in the number of homes that are available. Home sellers have historically moved when something in their lives has changed. So a new baby, a marriage, a divorce, new job. But the pandemic has impacted everyone, and for many, this has become an impetus to sell and to make a housing trade. You can work from home, you may want less square footage. Interestingly, the baby boomers and the millennials are competing for the same prices, which is contributing to so much of this competition, along with the inventory being tight. They're both looking for sustainable, quality homes that are a little bit lower on the square footage, so that there's not as much maintenance on the homes and responsibility. Pandemic likely spurred occupants to shorten their home stay to 8 years from 10 years, according to the report. So this is the largest single-year change that we've seen in quite a bit. As you can see, over the past decade, most people stay in their home between 9 and 10 years. Big shift here over the past year to now moving it after 8. So a lot of people built up equity during this time. We did see steady appreciation, although exorbitant appreciation last year. Great for all of our sellers. We're super happy, but it does mean with interest rates moving up, and at the same time having a tight real estate environment where things are accelerating, it's really tough if you're going to wait, because your buying power is going to go down while the cost is going to go up. The pandemic has also delayed plans for many Americans and homeowners looking to move on to the next stage of life. Recent surveys suggest that the majority of prospective sellers are actively preparing to enter the market this winter. That is unusual. So let's see. Majority of sellers enter the market in the next year, plan to list in the next 6 months. 65% have listed or plan to list this winter. 93% have already taken steps toward listing their home, including talking to an agent. I'm talking to quite a few people. We're getting ready for market. Have researched the value of their home and others in the neighborhood, as well as started making repairs or decluttering. So listings rose for the second week in a row. And here's where we're at with mortgage rates, still near very attractive historical lows. To give you some perspective, you can take a look at the screen. But we're not at the absolute bottom, but still very comfortable interest rates. Home prices are impacted slightly by raising mortgage rates, but there's no depreciation except for the housing crash of 2006. So you'll see a nice steady appreciation that's running right along with the interest rates. So house price appreciation is resistant to rising mortgage rates, and home sales have not been impacted by rising interest rates. Because everybody wants to buy a home. There's not many of them out there. So context matters for purchase demand. The economy is improving, and millennials continue to age in their prime home buying years. So the context remains good for the housing market. As I said, baby boomers are also competing for the same listings. So very attractive interest rates and expectations for interest rates. The home price forecast for next year ranges from anywhere at 3% appreciation to 7.4% appreciation, and home sales are also forecasted by the major forecasters to be up pretty dramatically. Number of months of inventory. As you can see, we are in a seller's market. That's less than 6 months of inventory. The inventory is as tight as it's been in the last 20 years. So it's a strong market. And then you're seeing that equity and appreciation is growing for homeowners, which brings us to the quarterly market report. And so now I'm going to go over the Q3 analytics for Delaware and for Maryland. Exciting times for both areas. We'll go through the county statistics, and then we will go through each of the individual towns statistics as well. All right, so what's happening kind of from a county level? So starting at the bottom of Delaware, Sussex County, we've seen the days on market drop from 76 to 24. The number of sales is actually down a little bit in 2021 versus 2020. I think the pandemic definitely contributing to that. And then seeing as prices continue to rise, relative to the other counties, means that it has put a little bit of a damper on that. That said, it's still very tight on inventory, which is also driving part of the reduction in sales. In 2020, the average sales price was $522, and then as you move to 2021, the average sales price is $550. In Newcastle County, velocity of sales up significantly from 1,356 units to 1,462. Average sales price up from 341 to 397. Average days on market dropping from 23 down to 14. And then in Kent County, also a pretty significant jump, 100 units year over year, and then a move from 274,000 on the average sales price to 328,000 on the average sales price. Town of Bear, Q3, there were 111 sales, 88 in 2021. Average sales price jumped from 364 to 431. Days on market going down slightly. Bethany Beach, 55 sales in Q3, 34 in Q4. So year over year, slight reduction. That said, a massive jump on average sales price from 878 to 1.4 million, and days on market dropping from a couple months down to less than a month on the market. Dewey Beach, 11 sales Q3 this year to this year 6 in Q3. Slight reduction in the average sales price. Probably more driver, a slight variation because of the sales that happened in 2020, more so than the lack of sales in 2021. It's just there are not many opportunities to buy in Dewey that haven't already been absorbed. Fenwick Island, the number of sales in 2020 was 11. This year, 5 in Q3. Average sales price also dropping slightly, but as we said, some of the best inventory and some of the higher priced inventory has been absorbed. Average number of days on market dropped from a few months down to 19 days. Greenville and Centerville, eight sales in Q3 last year, 9 this year. Average sales price is dropping. What you're seeing in Greenville and Centerville is that some of these larger luxury properties are not in the same demand that they were. Luxury at the beaches and around the Chesapeake and into Maryland are still accelerating. Depends on the demographics. So what's happening is some of these families are aging in Centerville and Greenville, the appetite and demand for the larger properties has gone down pretty dramatically. Hockessin and Pike Creek, 46 units last year, 59 this year. Price jumped from 497 up to 543, so about a 10% increase in average sales price. Days on market dropping from 30 to 10. Lewis Beach, Q3 sales 250 down to 193. Days on market dropping from 56 to 19, and then the average sales price rising slightly from 578 to 620. Middletown, 142 sales in 2020. 165 sales in Q3 in 2021. Average sales price rising from 418 to 493. Days on market dropping from 26 down to 11. Newark. Newark saw a big jump in units year over year from 295 to 343, and the average sales price jumping about 60,000 from 312 to 370,000, and days on market dropping by 1 week. Newcastle County, Newcastle County, 161 sales in Q3, and then 179 in Q3 this year. Average sales price coming up almost 50,000, and days on market dropping by a week. And then Rehoboth Beach, the velocity of sales down a little bit from 157 down to 110, but the average sales price jumping from 981 to 1.1 million. Days on market cut in half to 41. And now to review the Maryland market update for Q3. Look at Montgomery County. What you see is an increase in sales about 5.79%, an increase in the median price by 9.98%, increase in new listings of 12.37%, and an increase in the median price year over year by 6.29%. Prince George's County, sales up 4.45%, an increase in median price 11.39%. Days on market going down by about 11%, and then increase in the new listings compared to previous years of 20%. So a little more inventory than we've seen, which is also good. An increase in the median list price by 11%, which goes right along with the median price expectations. Anne Arundel County saw an increase in sales of 2.74%, and the median price up just modestly, so kind of I won't say treading water, but getting to a stabilizing level. Decrease in the days on market 22%, so still moving very quickly. And then there's just a slight amount of increase in the number of properties available. So the listing inventory still very tight, which is contributing why the velocity of sales is not quite as high as some of the other counties. And that is our real estate Q3 market report. If you'd like any of these reports, just text me, call me, send me an email, and I'm happy to shoot them over to you. Have a great day.